everyone, Mish here, August 31st, the end of the month, but still a long way to go to the long weekend it seems. And we've seen a steady decline in the market since Friday when we had the Jackson Hole meeting and Powell and the rest of the Fed went very, very clear on their hawkishness to try to control inflation. So I want to just do a little bit of a review here and then show you how three of the characters, there are 7 altogether, relate to each other and what to watch for in the market. Of course, I will definitely go to the charts after this. But we're starting with Graham. So remember, this is the industrial manufacturing sector of the economy. This is an index, and the only index, I might add, that is still sitting above the 50-day moving average, which tells me that these higher rates are definitely negatively impacting growth stocks and tech stocks and a lot of the S&P 500 stocks, but there is a glimmer of hope on the U.S. economy going forward. The reasons why is irrelevant. All we are looking at really here is the price and the relationships. So if Grandpa continues to hold the 50-day moving average, then it's possible that after the steady declines over the last several days, we'll see a bounce, a relief bounce in a bear market, but a bounce nonetheless going into the long weekend. Now I've got Frontline here because interestingly, this is still up, but if you recall when I showed you the chart, it went up to 13, which is really the area that it needed to clear on a monthly chart, and has not. It's back down. It's trading about 1150. So there's always going to be stocks going counter even within a basket. But the real point is will the pinch of inflation, even with some prices falling in terms of real goods like oil and of other types of consumer discretionary items that aren't necessary for day-to-day living, will they ease the point of inflation, hence raising Grandpa? And is that what he's trying to tell us? So let's bring on Grandma and transportation, who I also covered this week. And just as a sidebar, I know this may sound silly to some of you, but trust me, these characters get in your head. They've been in my head. They're a reason why I've been so successful, not only as a media expert, but also my track record. Because basically what it does is it gives you a story to sink your teeth into. And factually, people remember very little facts and 80% of a story, hence the creation of these particular characters. So let's take that moment now, before we go to the charts, and see what the dialogue between Grandma and transportation might look like. So just as a reminder, Grandma is retail, 70% of the GDP, and very much right now a big concern for everyone. We had Bed Bath & Beyond, for example, crash. We have companies announcing layoffs. And yet Granny Retail today for the first time actually broke the 50-day moving average and is now back into a bear phase. So if she were having a dialogue with transportation, which is the demand side of the economy, still above the 50-day moving average, marginally, but still above, the conversation would look something like whether or not Grandma would be asking how robust transportation feels with the economy going forward. Will we continue to see people out there buying goods that wind up getting shipped through trucks, or will people still travel through airlines and through cruise ships? Will we still see delivery through freight? And will that remain outperforming the rest of the weak market that we're seeing right now? Grandma will definitely tag along. If she believes that transportation is showing us that things aren't as bad as they seem, then she'll hang in there and people will go out and spend, and she will continue to lap around the malls buying things. If the transportation sector winds up giving it up and we start to see IYT break under the 50-day moving average, then we can assume that Grandma will get super tired and start to go down further. Grandpa will follow in kind, in which of case we're already seeing overall weakness in the other sectors. They will all have another leg lower. So let's take a look at the charts and put some prices on this story that we're seeing the three of these very key characters to the inside sectors of the U.S. economy telling us. So getting down to brass tacks, here is a chart of IWM, and this is exactly what I just showed you through the character. is if you can imagine the move from the June lows to the August highs, and now we went past the 50% pivotal point at 190 down to this 50-day moving average. What happens from here is so key to what happens to the rest of the market. We can certainly see the big swoon here in the real motion indicator, although still holding support. Last time we were down here, price was down at this level too, which is why I keep saying on the media that I don't see a major crash unless something catastrophic happens. More of a decline, find a trading range, a little bounce, and really staying kind of stagnating for a while until some kind of news changes the picture either to the upside or the downside. The other thing that's concerning to me is that right now we also have the IWM starting to underperform the benchmark or the SPY, and that too is concerning because in order for this economy to get any kind of signs that it will grow beyond the little bit of stats that we've seen come out, you really need to see IWM outperform the SPY and not the other way around. And you can see over the last course of time throughout July, it did so while it was having its big run up. There's no accident here that momentum rises, that outperformance rises, and price rises all at the same time as we're seeing now price fall, momentum fall, and performance fall. So at this point, really, we'd like to see this hold up. If it breaks, then I think we're going to see our next level of support probably closer to here. And if IWM breaks the 50-day moving average, then I think we're going to head down to about 175, and then we can have a fresh look. Now, of course, we know that they're working all in tandem, so let's take a look at retail next. So the retail chart, when I mentioned that today was the first day it broke down under the 50-day moving average, here you go. And so this is far more than 50% from the low to the highs. Now also you've got the momentum declining here, breaking down under the 200, not under the 50 yet. And this started actually underperforming the SPY back here when it was still trading up at around 68, kind of giving you a heads up. So that's why not only do we like to see all three characters together to get a picture, but we also like to look at our real motion indicator and our triple play indicators, because that also confirms or shows a divergence in terms of what we're seeing in price. And right now, they're all working together to show that the consumer discretionary space, as much as it tried to hang on, is starting to fail, and probably all going to wind up, depending on what happens with this sector right here, which is transportation. Now, transportation is still $1 or so above its 50-day moving average right here at 227.75. It's certainly coming down in momentum, but hasn't quite broken the 50 here. And for the first time, really in the last day, it's starting to underperform the SPY as well. Now, that doesn't mean that SPY is doing great. It just means relative to the ratio of the performance of the S&P 500, we want to see these inside sectors do great, and it's not. So if this is any kind of lead indication, then we might be able to see this price failure and kind of anticipate it before it actually happens. But at the same token, if we can start to move up and get back, let's say, over 233 in IYT, then I would imagine we'll start to see this pop back, and we'll start to see the momentum pop back, to which we'll also probably see retail pop back, and IWM really continue to hold on to its 50-day moving average, and therefore maybe at least a little bit, like I said in the very beginning, a relief rally going into the long weekend. So that's it for now. I hope this is helping. I can get way more animated with these characters. Of course, I'm trying to ease in. I do hope that these stories become really critical to what your own dialogue is, and I'm starting to see some positive feedback about them on Twitter. Of course, my real goal is to create financial literacy, not just for obviously people who are already been trading for many years, but people in the masses don't understand how the market works and they don't understand the economy. That's the whole purpose of these dolls, is so that everyone can participate and wrap their mind around something very obtuse into something very relatable. Okay, you all have a great day. Thanks so much for watching, and bye for now.